Hey everybody, we're going to look at, we're going to look at taxes today. Now, of course, because the book is a little bit out of date, it says the federal government spends about $3.5 trillion annually, but that number is at $4.4 trillion for the year 2019. Gross domestic product is about goods and services produced in the United States. It's a measure of our economy. High domestic GDP means the economy is doing well. But when you talk about the state and local government, they have to direct their spending on specific services like education, public safety, social services, and so on. There are several types of taxes, and I know I asked the question, which tax would you rather pay? Some people would say they wouldn't want to pay any taxes whatsoever. We have local property taxes, sales taxes, excise taxes, income taxes, corporate taxes, the lottery, and user fees. And we all pay property taxes. It depends on how much we're going to pay, based on where we live, based on the educational system we have in that community as well. If you look at your property tax bill, you'll see that 2/3 of your property taxes go to schools, whether you send your kids to the schools or not. Now, you're going to see that you have phrases like regressive or progressive types of taxes, and we'll get to that in a second. When we talk about progressive and regressive taxes, progressive taxes means that as you make more money, you're going to pay a different rate or a higher rate in taxes. But most taxes overall are regressive. They are usually a flat rate. Everybody pays the same type of tax regardless of how much money they make. So if you're poor, you're still paying the same sales tax as someone who is wealthy. But when it comes to a progressive tax, that means that as you make more, let's say in your income, you're going to pay a higher rate. So the more you bring home, the more you're going to be taxed. Therefore, it's called a progressive tax. And no matter where we live, we're always looking for limits to place on our tax system, whether it's at the property level or at the sales tax level, or of course your income as well. There's always a call to limit how much we are taxed in our states, in our local governments, and especially at the federal level as well. But since this is a brief discussion about what our state and local governments do, state and local governments can have financial trouble. That means they're not bringing enough money in and maybe they're spending too much. In the state of Illinois, a big problem with local communities is the tax, or I should say not the tax burden, but the spending burden that we have on pensions. Too many people are collecting pensions, and there's not enough money coming in to fund those pensions. So what we end up having is deficit spending, where we're spending money that we don't have in local communities. You could have situations where local communities go bust, and states then have to pick up the slack and bail them out, or at least become like a ward, or I should say create a system where the local government becomes a ward of the state, where the state is keeping control of their finances. Local governments can also raise money through bond efforts, where you as an individual can invest in that type of project that's being done, let's say construction-wise, for transportation, or maybe even for education. States and local governments are always looking for ways to raise money without having to raise taxes at the same time.